Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Jim Angel, associate professor of finance at the Georgetown University McDonough School of Business, to discuss the near-term impact to the markets from the insurrection on Capitol Hill, as well as a longer-term impact to the economy with the transfer of power to the Biden administration. Jim, it's great to see you as always. Welcome back to Trade Talks.
Why, thank you for having me.
It's always a pleasure. And while we understand the social and political issues that's happening with the insurrection on Capitol Hill, what are the impacts to the capital markets? Could that potentially have an impact? Because last week they were hitting all-time highs.
Well, clearly markets hate uncertainty. So anything that is going to throw uncertainty into the political process is going to have a downward impact on the market. Now, does that mean it is a push down the market, or just keep it from going up as much as it otherwise might have gone? Now, to a certain extent, you can say the beer hall putsch attempt that we saw happening was really bad, but on the other hand, you can view it as almost a catharsis on Trumpism. And it is breeding a huge response, which actually in the long run may be positive for the economy. We're seeing people paying attention to truth in media. We're seeing people pay attention to hate speech online. And so maybe there's a silver lining to the disruptions that we saw.
Yeah, and those are all great points that you bring up. And I also think that fundamentally, nothing changed with the companies or stocks.
Well, that's a good point. And remember that our stock market is forward-looking. It's worried not just about what's going to happen today, it's also worried about what will earnings look like next month, next year, next decade. And so the market is going to be thinking, what are the long-term implications for what's going on, more than what will the 24-hour news cycle say today?
And let's talk about long-termism for a bit here. What will the impact be of a mostly Democrat-controlled government? What will that mean for investors in the economy?
Well, clearly we're going to see a shift in focus in financial regulation. We can expect the incoming SEC to be much more consumer-focused, and they'll be paying attention to things like the implementation of regulation best interest. They're going to be paying a lot of attention to crypto. They can't help but do that. We're also going to see, in the macro picture, we're going to see probably more spending and different taxation. Now, I try not to say tax cuts or more or less, because the real taxation is when the government spends money. How it collects it remains to be determined. So the so-called tax cuts we saw a few years ago were not tax cuts. They were just running up the government credit card for higher taxes later on us.
And to touch on the crypto conversation for a second, part of the success it's had in 2020 is the hedge against inflation. Why is inflation becoming a big part of the conversation now?
Well, as Milton Friedman pointed out a long time ago, inflation has always been a monetary phenomenon. The politicians have this habit of wanting to spend more money than they raise in taxes. And they have this nasty habit, documented through history for thousands of years, of debasing the currency, of printing lots of money. And in response to the latest events, we've seen an awful lot of monetary creation coming out of our Federal Reserve. So there are plenty of people out there who are very concerned about an uptick in inflation. Many people think that the official statistics really understate the real rate of inflation. And for that reason, a lot of people are looking for good inflation hedges. Now, the stock market is one obvious place to go for an inflation hedge. If the inflation fairy were to come tonight and double the price of everything, well, that means it would double the value of, or rather the nominal value of all the goods and services produced by our common companies. Well, that means their value should go up likewise. Now, of course, when inflation hits, it's usually bad news at the same time, so it's not a one-to-one correlation. Other inflation hedges are gold, commodities, real estate, and recently some people are looking at cryptocurrencies as a potential store of value. Now, I'm a bit skeptic on that, in that when we see Bitcoin dropping 20% in a day, Doesn't seem like a very good store of value to me, but other people disagree with me on that one.
It is always a great debate talking about cryptocurrency. Jim, thanks for joining us as always, and thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
And thank you for having me.